So welcome everybody. My name is Michael. I'm one of the newer strategists with TrueView Financial. Um, whole life is what we're going to be covering today, and this one's kind of special to me because the first time I learned about this kind of stuff was my first seminar with TrueView. My girlfriend dragged me to it, and so I learned a lot, and I was so pumped up by the information that I went straight up to Justin, who's the CEO, and I was like, I want to learn all about this. You got to tell me everything about this stuff. So here I am, a little over a year later, and Tim's going to be presenting today. He does a really good job of explaining this stuff. Um, TrueVeer is definitely a unique company. I'm not just saying that because I work for him now, but it really is unique. He's they're very transparent with showing us how this all works and how they're helping the client. And I think that was really important to me when I was listening to them the first time. So I hope that you guys kind of get the same feel, the same vibe that I did when I first did this. And I'm going to pass this one over to Tim now. Good luck, Tim, and enjoy. If you have any questions, put it down in the chat. Save them for you can put them through while we're doing this. We'll acknowledge them towards the end.
Yes,
But
sir.
yeah, we'll answer questions at the end. It's all you, Tim.
Hey, thank you so much, Martin. Michael Martin. Thank you so much. And then, guys, welcome to our financial educational webinar series. We do this every Wednesday at 6:30 in the evening. So, um, I'm not familiar with everybody here in the room. So, let me just ask you some questions. Where are you guys from? You can just unmute and then just so that we will know each other right here. Go right ahead.
Hey everyone, I'm Hector. I'm from Vallejo. I'm a investor and wholesaler.
Good deal. Welcome, Hector.
Thank you.
Hey everybody, I'm Rex. I'm a trucker. I'm from San Leandro.
San Leandro. Okay, down. Is that down south, right? San
No,
Leandro?
that's by Oakland.
By Oakland. Okay, got it, got
Yeah,
it. Yeah. South of Fairfield, I should say.
yeah,
Yeah.
definitely.
Welcome, Rex.
Thank you.
Let's see, who else do we have here that I'm not familiar with? I think that's it, right? We know Jerry. Yeah, we know. Hi, Jerry. Yeah. So this evening, we will be discussing a financial GPS unlocking the secrets of whole life. Okay. So I like to compare this GPS, like, the one that we use for driving. This gives us direction from point A to point B. So in the financial space, we are doing the same thing. Here at Truvia Financial, we are giving you the financial roadmap from your current situation, financial situation, going towards your financial goals. And just to make sure that you understand, this is purely an educational presentation and not sales. I'm not trying to sell you something or persuade you to purchase any type of financial product. What I will be showing you is just one of the strategies that can guide you to reach your financial goals. Okay, let's start with our agenda for this evening. So we will be going over our we are the Truvia Financial, who we are, our vision and mission, the financial roadblocks, and we'll talk about the solutions for that, introducing the whole life. What is whole life? Why whole life? And what is whole life for? How to use your whole life, key considerations. And I would like to share with you my story as well, some case study that we are going to have, and then the highlights, more like a summary of what we talked about and the bottom line. And at the end of the day, I'm just going to give you some things to think about. Okay. So we are Truvir Financial. Why did Justin, our CEO, name our firm Truvir Financial? You know what? That's because of our values and what we really, really stand for. Okay, Truvir. So let's go over our values real quickly. What is trust? Okay, it is a process. You just don't trust somebody overnight. Okay, So we are here to build that trust, to build that relationship. And of course, the second one, R, stands for relationship. Just like trust, it's a process. I think of it like a flower, right? You water it regularly, you nurture it, and then it will grow. We are doing the same thing with our clients here at Truvia Financial. We are not transactional. We are, we want to build that relationship between you and me. Okay. Understanding. It goes back to not being transactional. We really want to understand what your needs are and goals so that we can present to you, appropriate solutions and strategies that fit your solution, your situation. Education. You know what? You don't know what you don't know. That's, that's it. You just don't know what you don't know. So if you don't know financial strategies, you cannot implement that into your lives. Okay. So let me check here if somebody is in. Okay, nobody. Sorry about that. So this is a GPS, education is a GPS where we are providing you with the financial GPS, the tools, so you can be where you want to be with your financials. Vision. Again, this is where the GPS comes in. It is a roadmap. So you don't get lost if you have a map in front of you, right? Just like when you're driving, in a road trip, if you have a map, you don't get lost. So think of us, the Truvir Financial family, as your navigator. Okay, we are here to guide you. We are here to give you direction so that we have a smooth sailing road trip. Okay, integrity. We as strategists are not looking after ourselves only. We are looking out for you, the clients. That's why we do what is right for you and not our pockets. So resolve. We build trust, we build relationship, we got educated and understood the strategies presented to you, those strategies that are aligned to your needs and goals. You saw where you're going because of the GPS. Now you have that resolve, the aha moment. Okay. Now it's time to implement what you learned. Okay. Again, Truvia Financial is founded by Justin Corpus, and he's actually with us tonight. So here's our vision: to redefine how people think about money by fostering a culture of financial literacy, ownership, and intentional wealth building, helping every generation moving from surviving to thriving with purpose and control. Isn't that true? Mission. Our mission is basically to educate. You can probably think of us as an educational firm because we really, really want to hammer down education, knowing and understanding your options, financial options, strategies before you dive into it. And this is the first step. Okay. This is the first step on making an informed decision. Let me, sorry about that. Let me just let somebody in. Okay. So our mission is to educate, 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 educate. Now, we don't live in a perfect world, right? We always have challenges in life. Since this is a financial webinar, we're going to be talking about our common financial roadblocks, our challenges, our hurdles that we need to jump over. So whatever your financial status in life, make sure one, I'm sure that one way or another, we encounter these challenges, roadblocks. So let's go over some of them. Okay, these just some of the many challenges that we encounter. So taxes, whoa, always taxes, right? By the way, if you have any questions, just either put it in chat right away or you can wait until the end of the presentation. Okay, taxes. So you don't feel sometimes that we are just paying too much in taxes, right? Tax here, tax there. You get tax everywhere. And since we are here in California, you probably saw or heard about, they're thinking of, the government is thinking of taxing us on the miles that we drive. So I'm not sure about that one. I don't know if that's going to pass or not. I don't know if it's passed already, but I just see it in social media that the government is maybe doing that for more to get more revenue. Okay, but of course, taxes is very essential for the government to function. So how much in taxes we need to contribute to the government? So how much do they really need from us?
Hey,
Let's
Colleen,
take a
it's
look at the U.S.
Rosendo.
debt
Just
here.
wanted to make sure I got back to you. Give me a call when you get some time. 925-200-7549 is my number. Talk to you soon.
Not sure what that was, but
Okay, sorry.
let's
No,
jump.
probably because it's not muted. Okay, anyways, going back to taxes, looking at the US debt clock here, this one is very current as of last month. We are now at 38 trillion in debt. Okay, trillion with a capital T. So if you look at the debt per taxpayer, you're looking at 355. Where that is that at? It's like right here, 355,000 per taxpayer. See, that's more than a year's salary for most of us. So look at the debt to GDP ratio. It's 124%. The government owes more than what the GDP of the country is. So with that information, what do you think is the future tax rate be? Is it going to be higher, lower, or is it going to be the same? That is something to think about, right? Especially, we're working, we have children, we have family. What will future tax rate be? Now, let's go over the next financial roadblock that we have. Oops, wrong button. Personal debt. Okay. With our access to the credit cards nowadays, it's very, very easy to use them, even when we know sometimes it's not good, it's not for good reason. So this is one of those roadblocks that we have control over, but sometimes we just overdo it, right? Imagine if you don't have to pay 18 to 24% in your credit cards or personal loans. Another roadblock is money for our kids' college. Are you one of those that worry about how to fund your kids' tuition fees, especially in college? You're not alone. I've experienced that with my eldest son. He went to UC Santa Barbara a few years back, and he had some scholarship. But of course, aside from just the tuition fee, you also have the dormitory, you also have the allowances, and it was hard for us at that time. Good thing about that, he didn't have any student debt. But it's one of those problems that ex people experience throughout their lives. Bad financial strategies. Not all firms are created equal. Not all agents or consultants are looking after your financial well-being. That's true. And that's why some of us end up with bad financial strategies. And then, not the least, roadblocks is the market fluctuation. You know, of course, the trajectory of the market is always going up, right? Long term, it's always going up, but there's always fluctuation along the way. As you go up, it's always goes up and down, but the trajectory is going up. So depending where you are in life, a dip in the market can have a big impact on your finances. So just like anything else in life, if you have problems, you always have solution. Okay. Now, solutions. What's the solution to those financial roadblocks that we have? I'm not saying that this is the only solution. I'm not saying that this is the only golden eggs that we have in our basket. I'm not saying all that. Okay. What I will show you though is just one of the strategies that can break these roadblocks towards your financial goals. Okay. Just one of the many. Okay. How do we break roadblocks to your financial goals? Let me introduce you to a life insurance. So when you think of life insurance, more than likely you are thinking about a death benefit, right? Life insurance, death benefit, which is normal. But there's more to it than just death benefit. Okay. You can actually incorporate this life insurance into your financial portfolio. So it is not only protecting your family's future, but it's also building, oops. So you have financial protection for your family. Okay. You are building long-term wealth, and you're actually leaving a legacy to your families, to your beneficiaries. Okay. So now we will go even further. Instead of just looking at it, the life insurance, we'll go deeper. Okay. We'll talk about whole life as a financial strategy to break those roadblocks. Okay. So what is whole life as a strategy? First of all, it is a type of a permanent life insurance that provides that benefit. So of course, providing that benefit, that's protection, right? It gives you cash value. So it gives you an equity that grows over time inside your whole life. And it's tax free when the policy is structured or designed and funded properly. Okay. Designed properly, funded properly, you are good to go. And of course, they have a fixed premium. What does it mean by that? Even when you age, even when your health condition, as we grow older, our health gets bad or even worse, right? But if you have a whole life, your premium is fixed from the beginning of that plan or policy all the way to the end of your life. So, in a nutshell, this is a whole life. Okay. So, why whole life? Why whole life as a financial vehicle, as a strategy that can solve your problems? So, when you're leaving a legacy, when you're like leveraging, right? Leveraging whole life, you are like opening a toolbox to fix or create something. Okay. Think of it as, think of it, think of a whole life as your toolbox. Okay. Inside your toolbox, there's a whole lot of different tools inside it, right? So, what do you have inside it? You have a legacy creation tool, you have a wealth building tool, you have a liquidity options tool, and you have predictability. Okay. Those tools can actually help you, with, let me just click all these. So all these tools can actually help you, you know, conquer or go over the hurdles of or road of your roadblocks in life. Okay. So what is my whole life for? So knowing and acknowledging roadblocks, right? You encounter the first step to fixing those problems. So next is finding the right strategy towards fixing them so that you are on your way towards your destination. I'm always thinking of this as your GPS. destination from point A to point B, your financial goal. So again, this is a GPS, right? So college fund, I'm not against 529s at all. Those For those of you that don't know what 529 is, it's a bank product that serves as a college funding vehicle for your kids. So it's a tax-free, but it's very limited in its utility. You can only use it for college purposes. So what if your kid doesn't go to college? What happens then? Anybody know what happens if for your with your 529 if nobody uses it for college? Nobody? No. Anyways, the what happens to your 529 if you don't use it? You might get penalized because the purpose of 529 is solely for educational purposes. If you don't use it for that, once you take out the money, instead of having a tax-free blanket, you take away that blanket. Now it's taxable. It's considered income. Okay, and you'll be penalized as well. So solution. What is the solution for that? You open your whole life toolbox, right? Open your whole life toolbox, borrow some cash value from it, and then put it towards the college funding for your children. It's tax free and there's no penalty at all. Next, what is my whole life for? It can be a supplemental retirement income. A properly structured and designed and funded policy can be used as a supplement to your retirement. It just works like your 401k or IRA or like an annuity. It's all tax free as well. So once you retire, just start taking money out of your whole life. Debt reduction. Of course, you can use a whole life toolbox for that too. So instead of paying creditors or credit card companies with your hard-earned cash, why don't you use your whole life? You know, you add one more step to that process. That one step is funding your whole life, and you can borrow from it and pay for your debt, like your credit cards or your personal loans. Instead of using your savings account, use your whole life to pay for your debt. Sure. Savings alternative. Some of us are having a hard time saving. So use this tool. Use these as a forced saving. You put aside premium on a monthly basis, and then your money grows inside a policy. And next thing you know, when you have a big nest egg in there, you can use it for anything. And family protection or income replacement. You have a death benefit, is your family's protection. And then you have a cash value that acts as your income. Again, whole life as a toolbox with all these tools inside that you can use to fix your financial roadblocks. Now, how to use my whole life. So this is a strategy right here. Again, this is just one of the strategies or tools that you can pull out from your toolbox. This is not the only strategy, okay? Not the only strategy, but one of the strategies, okay? So what do you do first? How to use it? Of course, first you have to fund a whole life policy, okay? Open a properly structured policy. Why do I say properly structured? That's because there's always a bad way to structure a policy. There's a good way and a bad way. So if your agent or your consultant only thinks of for himself and not you, more than likely your policy will not be geared towards your financial destination, your financial goals. This GPS will only be showing you, you will be showing you towards filling the pockets, instead of you getting help. Okay. It's just a reality that we see in this industry that some of the agents don't structure the policy properly. Okay, that's why I'm saying properly structured policy. Now that you have funded the policy the way it's supposed to be, once you have a cash value, okay, next step is
Without
to
meter.
borrow from your policy, loan from it. Okay, and then find opportunities that can give you a return. For example, you know, if there was a market crash, so the stock prices plummeted, right? So it's time for you to take advantage of that. You borrow from your cash value, buy the stocks at a discount, pretty much it's at a discount, and let it ride the waves until you make gains. Or you can use it also for like paying the 18% to 24% in interest rate with your credit cards, or use your cash value to pay down or eliminate your credit card debt altogether, right? You capture that 18 to 24% and pay yourself back. So instead of that interest going towards the credit card company, it goes towards the cash value, your own banking system. Now you are creating your own banking ecosystem, me or you becoming your own bank. Okay. And of course, you rinse and repeat the process. By the time you hit retirement age, of course, you will be thanking yourself for doing this strategy. Just repeat and rinse and repeat the process. Let's talk about key considerations. You know, where does your money grow when most of us worry about the market downturns? So I'm not saying that the traditional savings is bad. No, I'm not saying that at all. But it's just we're just going to compare traditional savings to a whole life or a permanent life insurance. Okay. So in your savings account, let's say you have $100,000 and you want to use it for real estate, business, to fund your kids' college, emergency, or debt reduction. Let's say you borrowed 50 or you withdrew, I should say, withdrew 50,000 from your savings account. So what happens then? Your savings account value will now be 50,000 because you borrowed 50. You withdrew 50 from it. Okay. Now you are earning APY, you're earning interest at that $50,000 left in your savings account. Okay. Let's compare that to a permanent life insurance, which in this case, a whole life. It's the same scenario. Let's start with 100K. You borrowed 50. Your insurance value is still at $100,000. So now you're earning APY at 100K. So comparing that to your savings account, let's say your APY or your um, annual percentage yield is at 5%. 5% of 50,000 is 2,500. Okay. In the insurance side, 5% of 100,000 is 5,000. So I'm just saying, I'm not saying that savings is bad, but think about, which type of a financial vehicle gives you more. Okay. Especially when you're trying to use the money for opportunities for college funds or for emergencies. At the same time, before I forget to mention this, when you are borrowing from your permanent life insurance in your whole life, the principal is still growing as if you never borrowed from it. Okay. Why is that? Because you didn't withdraw the money. You did not withdraw the money from your account. You just borrowed from it. That's why you are still earning as if you never touched the your insurance. So let me tell you about my story on how I utilized this strategy. Okay. Before, let me just backtrack a little bit. Before I joined Truvir, before I got into the financial industry, I never knew about whole life or IUL. I just knew about life insurance being the death benefit because that's all I learned when I was not in the industry. My background is military. I served 20 years in the Air Force, and all they taught us while I was put it in the TSP, put it in the TSP, your money put it in the TSP, just like a TSP is just like 401k for us. And then it will grow, it will ride the waves of the stock market, whatever. But at the end of the day, it will grow, and that will be your retirement or a supplement to your retirement, right? Not until I got into the industry that I learned and I understood that you can use whole life IUL, as a strategy as as part of your financial portfolio. So I retired at the age 44, and that's when I opened up a policy, a permanent life insurance policy in 2021 for legacy purposes, and of course, as a supplement to my retirement. At that point in time, you can probably see here, 3 years later, my cash value was at 6,000, give or take. So this is the actual illustration that I had for my policy, and there were you know at, mm, I would say in at target, right? Because right here the cash value on my third year supposedly about 5,600. I was just passing that a little bit. It was mine was about 6,000 at that point in time. So what I wanted to do is to really check how it works, okay? How this strategy works. So what I did was I borrowed money from it. I borrowed $4,000 out of my policy, and then I use it as part of my down payment to my to the property I bought in the Philippines. Okay. Of course, you say, "Wow, what a property! It's only 4,000." It's just part of it. But of course, the exchange rate is a little bit different in the Philippines. That's why 4K was a good enough amount for us to put a down payment on the land. Now, I'm not thinking of it as I'll get a return right away on that investment, but that land is supposed to be our retirement property later down the road. Okay, so what I wanted to say here is that this strategy works. Okay, I experienced it myself. Of course, this is just one of the tools that I used. Talking about the whole life as a toolbox again. I just took a little tool here in my whole life and then use it for a down payment to my property. Now here's a case study of a 45-year-old male. You know, this one is about debt elimination. So open up a whole life in 2025. So specifically, his purpose was to just eliminate debt. You know, he got some money, but he didn't want to dump that money, just pay the credit card right away. Okay, because he knew the strategy that if you just add one more step, just like what I mentioned earlier on how to use this whole life, add one more step in the process, open up a policy, dump some money in there, it will grow, you borrow from it. This is what he did. So purpose is specifically for debt reduction, but of course at the same time, because it's a whole life, he's leaving a legacy for his family at the same time. So the annual premium is at 6,000, which means it's 500 per month, and he put $20,000 as a lump sum. So when you do that here in the first year, you can see it in your first year right here. Putting $20,000, right? You have a net cash value of 17,887. That's 89% liquidity in your policy right away. Okay. So what did he do? He borrowed 12,500 because that's what his debt was, you know, borrowed 12,500 and eliminated his debt. Okay. So what happened then? He just freed himself of the 24% interest rate that he was paying for his credit card, for that credit card company. Okay. So instead, what he did, right? He captured that, the card payment, the credit card payment, and the interest, put it back to his own banking ecosystem. Okay. You pay yourself back with that amount. So at the end of the 2025, he was debt free. Okay. So this is just one of the strategies that I wanted to show you that you can use. Uh, I feel like I'm repeating myself here, but it's actually true that you can use a whole bunch of tools in your whole life toolbox to eliminate or to conquer your roadblocks. Okay. Now that I've showed you, how you can solve your roadblocks with a whole life, let me just summarize what we talked about. So what can you get from whole life? It's a tax advantage. Once you borrow money from it, you don't have to pay taxes with that on that amount. Okay, leaving a legacy. At the end of the day, whole life is still a life insurance policy, so there's a death benefit. Wealth builder. Cash value grows inside the policy as long as you properly fund the policy. Liquidity. You can access your money, you can access your whole life anytime you want, as long as there's cash value in it. Predictability. As I said earlier, age and health conditions don't affect your premium. You always pay the same premium from the very beginning of your policy all the way to the end of your life. And again, whole life as a financial multi-tool. So again, I'm not saying that this is the only way to solve your problems. This is just one way to solve our financial problems. Bottom line, life insurance is not just a death benefit. It is a financial multi-tool that can be incorporated into your overall financial portfolio. It is not a one-size-fits-all solution. It needs to make sense to you. Of course, it needs to make sense to you. If it doesn't make sense, you know what? This is not for you. But a lot of people experience this already, and this is not like a scam or any type of more like people are scamming you or anything like that. As long as it is properly structured and as long as it is funded properly, your money is safe in there. Cash value will provide you source of funds for various financial needs and wants. A properly structured plan offers you stability, flexibility, and potential for long-term growth, giving you lifelong coverage and financial security. It is a tax advantage financial vehicle that can leverage for investment opportunities or tackle life's financial challenges. So, before we end this, let me just give you something to think about. Okay. What direction is your money really taking you? Towards freedom or just expenses? So if your income stopped today, would your financial plan still move you forward? Are you relying on investments that you can control or a system you can actually steer? What excuse me. What's the cost of not having guaranteed growth in your wealth strategy? What would financial peace of mind look like for you and what vehicle could you get you there? Is your current financial plan building value you can access or lock it away. So those are the things that you can think about, moving forward. And we are towards the end of our presentation here. I just wanted to talk to you real quick about our next event. So on the 21st of Feb, that's a Saturday, we actually have a in-person Wealth in Waves financial seminar over here in our office at Fairfield. So if you guys, I would like to invite you guys, if you are free that Saturday, come on over. Just register. We have that QR code. Just register, and then we'll see you here in our office. Um, Still, we're talking about those financial GPS and financial tools, okay? So that you can move from your current situation towards your financial goals. And, oopsie, of course, this is just the flyer that we have a financial educational webinar every Wednesday at 6:30 in the evening. Okay. And if you want to get in touch with us, we have the QR code here for a free financial consultation. As I said earlier, right? As I said earlier, it's better for us to travel if you have a GPS and at the same time you have the navigator. Think of us as your navigator in your financial journey so that you don't have to, you know, get lost somewhere, from point A to point B. So, and now we are open for questions, and you can put it in the chat or you can just unmute yourself and we'll go from there.
Yeah, we do have one question. Thanks, Tim, by the way. So one
Thank you so much for listening, you all.
from Brandon, we have, what is the difference between a properly and improperly designed whole life policy?
Okay. That's a lot. The if the focus now, let me just say this. It depends on the focus of the client. Okay. If the client wants to have a big death benefit, we will structure the policy like that. But if you want to structure a policy with a very good cash value, we will structure that policy that way. Okay. Now, some in the industry will show you one thing and then put the policy or structure a policy a different way. Okay. And then anybody can also jump in
Yeah,
to
yeah, thank
explain
you.
the difference between a properly structured and a badly structured policy, I should
Yeah,
say.
so the main thing with a properly structured policy is going to be minimize death benefit, maximize cash value. I think it's really not that complex. Again, it has to align with your goals. Um, so just to simplify what Tim is saying is that it's minimized cat or death benefit and maximize cash value, right? So now is this something that you want to utilize to leverage immediately? Right? I've had people leverage it immediately to invest into some real estate syndication, some fix and flip properties. Or is this something where in the next 3 to 5 years you want to leverage and take advantage of another opportunity? Right? So again, there's a lot of different things out there, but the main thing is that you want to minimize the cost and the death benefit and maximize the cash value. That's really what it is at the bare bones of it.
Okay.
Thank you,
Hopefully
Justin.
that answered your question, Brandon. So the next question is, what kind of APY is earned while you're funding the policy? Is it variable? What does it depend on? Anybody want to answer that one?
Go ahead, Tim. I'll add on to whatever you say.
Okay. So normally on a whole life, your dividend is between 4 to 6%, Hector. Yeah, 4 to 6%. It just depends on the growth of the company for that year because your dividend is based on the growth of the company. but average is 4 to 6%.
So, I hear a little bit of echo. Sorry about that.
Yeah.
But the main thing of this is depending on the carrier, right? There's different carriers, Penn Mutual, One America, Lafayette Life. They have different dividend rates. So some carriers, some whole life carriers have guarantees, um, some stronger than others. So if you're looking at a guaranteed standpoint, it's around 3%, 3.25% with One America. But if you're looking at with the dividend, you're looking at anywhere between 4 to 6% as far as a yield. I mean, we've seen a little bit higher cash on cash returns in the whole life policy because of the maturity and how long they've had it. But again, if you're looking at internal rate of return, anywhere between 4 to 6%, depending on which carrier you go with.
Thank you. I also did have another question. You used an example earlier where you said if you had 100 grand in savings, pulled out 50, so then now you're only gaining um, an APY on 50,000 versus a whole life policy where you could borrow against it and you borrow 50, but you're still earning an APY on 100K. Could you explain that a little bit?
Correct. Yes, sir. So in a permanent life insurance, whole life or an IUL, an index universal life, you have different buckets. You have a account value bucket, and you have a cash value bucket, and the third bucket is your death benefit bucket. These three buckets are totally independent from each other. Okay, your account value bucket is the account where your interest is based on a yearly basis. The cash value bucket is the account where the money you can is the money you can touch. The cash value bucket. And of course the death benefit is the death benefit bucket, right?
So
So
yeah, let me expand on
yeah,
that.
go ahead.
Oh, go ahead, Tim.
Okay. So why is it that you don't you don't lose your value, right, when you borrow from it? Because your interest is based on the account value bucket, not the cash value bucket. You can take away the cash value money or amount, any way you want, but your interest is still based on this account value bucket. That's why even if you borrow from your cash value, your APY will be based on this account value bucket, which is $100,000 still, because this one never goes down. You never borrow from your account value, you just borrow from your cash value. Hopefully, I explained it.
Okay, so I'll kind of like break that down very
Yeah.
very simply. Yeah, so yeah, basically what you're doing is you have that bucket, that cash value, you're borrowing against it. You're not withdrawing the money, so it's still going to earn off that original principal. So let's say in the event you took that loan and you never paid it back, just hypothetically, right? Obviously, we want to be honest bankers, but hypothetically, let's say you borrowed against it and you never paid it back. It's just going to be pulled from that death benefit. So just a very easy example. Say 100K in cash value. Let's say you have a $200,000 death benefit. You borrow 50, you never pay it back. That $200,000 death benefit at passing turns into 150. So that's really what it is. You're borrowing against the cash value and you're still going to earn off that principal amount. So that's again, it's kind of like I would compare this to, let's say, a HELOC, a home equity line of credit, where you're borrowing against the value of your home, right? So that's very similar in this case.
Mhm.
Oh, thank you.
Any other question out there?
Yeah, these are some good questions.
Yes, sir. Keep them coming. Nobody else? Going once?
Everybody
Going
feel
twice?
confident. Sorry, I had an echo. Everybody
Yeah.
feel confident in whole life. Any other questions that maybe something that you heard and didn't totally understand? This is definitely the time to do it.
Okay.
Sounds like everybody's an expert in whole life.
Jamie.
Yeah. Yeah. Well, let me just say this. You go to our financial seminar on a weekly basis or on, let me say, on a regular basis, you will learn a whole lot of things about strategies on how to break those roadblocks, right? So again, we're gonna have a in-person Wealth in Waves here on the 21st of Feb in a couple weeks on a Saturday. Hey, you are very welcome. You guys are very welcome to stop by and listen to the seminar. So,
Yeah, I want to throw in that we made sure not to put it on Valentine's Day, just so none of you get in trouble with your partners.
that's true.
But you can make this a date. Bring your partner. You know what, honey? We're gonna skip the flowers this year. I'm taking you to True.
Yeah. Oh, we have one more question down there. What's the main difference between a whole life and an IUL?
Perfect.
So, a whole life, you have guarantees. You have you get dividends from the company. But in an IUL, just like its name, it's an indexed universal life. So you can allocate your money in different indices out there. That's how your money grows in an IUL, allocating your money in different indices for that company, and then in a whole life, you get dividends, which is guaranteed that you get. Hopefully, I answered the question. One.
Follow up. Yeah, you're good.
Okay, here we go. Would one get both types of policies or just one or the other? It really depends on your goal. Let me just say this though. In When you think of an IUL, think of it as a long term because the growth in there, it's slow at the beginning and then it will accelerate it 10, 20 years down the road and then the growth will accelerate, I should say. In a whole life, it grows a little faster at the beginning so that you can use the money, especially if you want to use it for like an infinite banking. Last month, I talked about infinite banking concept. Whole life is perfect for that purpose. But of course, you can also use your IUL if you max funded it, right? So it depends on how much you fund it. But these two policies, you can let me see. You can open both, or you can just open one. It just depends on your goals, I should say. So if I decide to get both, should I start with your whole life? If your purpose is for like an infinite banking concept strategy, I would say start with whole life. But if your goal is, let's say, retirement alternative, and it depends on your age as well. If you have 20, 30 years before retirement, I would say use an IUL as your retirement vehicle. Hopefully that answered your question. Okay.
So, Tim, you said to
Hello,
use an
sir.
IUL for a retirement vehicle versus losing a whole life policy?
as an alternative, if you have a if you have uh let's say you wanted to open an IUL as a retirement vehicle as long as you have time, meaning that 20, 30 years of the policy or your money compounding inside the policy, you can use an IUL as a retirement alternative retirement vehicle. But if you want to use it as a right away, of course you can use an IUL as well, as long as it is max funded or there's a lot of cash value inside the policy. But the most um, efficient way of using your money right away is through a whole life.
Okay, because you talked about uninterrupted compound interest. And so uninterrupted compound interest, would that be true in a IUL or in a whole life policy? Just curious.
Anybody want to jump in and answer that one from our team? I should say. Just a second. Because both, I'm
Yeah.
sorry.
Oh no, yeah. I mean, you can earn uninterrupted with both. I mean, that's the thing
Yeah.
is like, you know, because if you go to a non-direct recognition company with a whole life company, you're borrowing against it, right? Unless it's direct recognition, but both earn uninterrupted compound interest. Just one has a little bit more upside is the IUL. And in my opinion, with any of these, I mean, there's been studies on these through Ernst and Young as a very good supplement, retirement supplement, right? This is not to replace anything. This is more so of a volatility buffer or something that could be, let's say, you want to borrow against this in retirement as your portfolio took a downturn. So then you wait for your portfolio to return as you take it from your policy, right? So it's a volatility buffer. But so in saying that, you can earn uninterrupted compound interest in both for the IUL and the whole life. It's just one has a little bit more upside than the other over the long term.
Good meeting, Justin. Hey man, you know me, brother, right? I'm an agent also already. I use Lafayette Life.
Yeah,
So I'm not gonna go through all a bunch of questions, kind of just putting it out there for the rest of the team, people who are
yeah,
on right now. I'm very familiar with uninterrupted compound interest and the dividends that pay out through. I use Lafayette Life all the time, love them.
yeah.
And then the difference between the IUL, where they say, basically it's a annual renewable type term situation, blah blah
Mhm.
blah, all that stuff. No, it's a great meeting, man. I'm not trying to quiz anyone or interrupt anything.
Yeah,
But no, it's great meeting. I'd love to link up with you guys. I like what you're doing. Someone had just sent me the link just like 30 minutes before you guys, like really late before you guys were doing it. So I want to stop by and see you, Justin, and all you guys, because I think there's ways that we can synergistically work together and love what you're doing, man. So, I'll stop with the questions, man.
No, I mean, no, the questions are great. I think that's
Yep.
that's the main thing is for everyone to understand, right? Because it just comes down to understanding what best fits for the individual, right? So if you want a little bit more upside or you're more comfortable with the guarantees, maybe whole life is better. But if you want more upside, maybe an IUL is better, right? But again, like you said, both earn uninterrupted compound interest. Oh
And
yeah,
I piggyback off of the questions that are being asked here. So Rosendo, you are an agent, outside agent of Truvier, and some of these folks here that are participants or a policy holder or even thinking about being a policy holder don't know, might not even know what kind of questions to ask. And so just getting an outside, so yes, it's like one part, yes, challenging the presenter or whatnot if you have to. But that is what stresses, not just stress, but like just challenges and or brings out the conversation. And the whole point of this is to have a conversation. Have a
mhm.
conversation about it, what you can do with it. And if it's not that topic, somebody else might have a whole life and have an idea or heard from another agent, hey, they said this word. I have no idea what it is. What is it? So thank you, Rosendo, for asking these kind of questions. So We love
Absolutely.
questions. Like I said,
Mhm.
some of these folks don't know how to ask the question.
Good point. Good point. No, I appreciate it. I'm gonna cease and desist with questions or or any remarks or any of that stuff. Not trying to sell here, but no, it was a good meeting, and I want to connect with you guys and your team. I think
That's
there's some
cool.
things that we could work together with. So appreciate you guys.
Thank you,
Absolutely.
Sando.
Awesomeness.
Yes, sir.
Um, Michael, can you go over some of the events that I listed here on the chat?
Yeah, yeah, mute that
Put
echo.
links in there
Oh,
because I think
echo,
the
echo.
QR code
There
was
we
too
go.
fast.
Oh, wow. Yeah, you put it on
Oh,
it. Okay, yeah, so we have Solana Wealth Builders. That's always a fun one. This is going to be February 11th. That's 6:30 on Zoom. The link's right there. The presenter is Brandon. He's one of our senior strategists here. Then we have another one. Looks like this one, the in-person one. Those usually get pretty crowded, so I definitely recommend registering. That's also Solana Wealth Builders. That's the next day on the 12th, 5:30. That'll be here at the Daily Desk in Fairfield. Um, then we got another Solana Wealth Builder. This is February 18th at 6:30, another Zoom one. And then Wealth and Waves, February 21st. And that's with us here at the Daily Desk. We usually have some food and some snacks and stuff. So it's a nice free event. All these are free events, unless you want to give us money for it, you know. But no, we're just doing this for educational purposes. Just trying to help people out that don't know about these strategies, which, like I said in the beginning, they did for me, and they're actually pretty fun. So we'd love to have you guys join us. And yeah, I think we got all the questions. If you guys do want to reach out to us, the contact info is right there. You could either scan that QR code or visit us at the Truvier Financial, or look for us on Instagram too. We post some pretty cool content sometimes. So thanks everybody for coming out, and good job, Tim. And thanks
thank
for
you.
the extra questions. I appreciate it. Can't wait to meet you.
Yeah. Thanks, everyone. And everybody, have a good night.